Welcome back, everybody. This is week 3 of Outperforming Opinions. Today we will be covering Apple Incorporated, AAPL. I'm sure a lot of you are familiar with the stock. It's one of the most popular stocks and one of the most profitable. Actually, I think it is the largest company um, in the U.S. stock market and one of the largest in the world. So, kind of like what we did last week with Tesla. I won't bore you guys a lot with the introductions. You're very familiar with the management team and a lot of the moving parts up there. Um, but I figured that we could use Apple as a nice follow up to Tesla before we start covering some of those smaller, more disruptive companies like we did with our first episode in STEM. So, without further ado, let's just get right into it. I think Apple is going to be a very, very interesting discussion for us today, and I think we will be able to pick it apart pretty nicely. So, without further ado, let's just roll right into it. The first thing I want to talk about with Apple is they just released their earnings report about, I want to say 2 weeks ago. And so we can check that out. It was very strong quarter, despite the whole, tech being overvalued, and a lot of people are saying that Apple is trading at a nice premium right now. They still were able to positively surprise, and we did see some nice positive sentiment regarding their earnings report. So I pulled it up right here. Let's just dig into it a little bit and kind of break it down. So we did see some nice revenue growth year over year. So total net sales grew 31%, 31.2%, I believe, if I punch those numbers in correctly. So 31.2% growth. That still puts them in a growth opportunity category for top line. So that's pretty shocking when you think about the fact that, hey, Apple just reached 2 trillion in market cap. How can they be a growth company, right? That makes no sense. There you go. So they're actually at 2.4 trillion, and they're still growing revenues at a pace consistent with a growth stock, which is absolutely incredible when you think about that. A lot of people are saying that they're going to hit 3 trillion for the next crash. A lot of people are saying that it could be 2025 or it could be 2030. I think it'll come a little bit before 2025, but we can get into that towards the end of the video. Nevertheless, this is still very impressive for a company of their size to be growing and doing that much in just 3 months time. Think about that. They're doing $81 billion in 3 months in total net sales. That's absolutely incredible. And then looking at their cost, so again, keep in mind their sales went up 31.2%. I'm just gonna double check that math real quick. Bear with me. Yeah, so 31.2% is what their revenues went up. So let's look at their costs, okay, just to see if proportionately if they're able to manage any efficiencies. So their costs increased from 32,693 times million, so 32.6 billion, to about 40.9 billion. So that would represent an increase approximately 25%. So as you can see, they are seeing some nice cost efficiencies. Even at their size, they're managing to become more efficient and continue to cut those costs. So top line's going up 31.2%, expenses are only going up 25.1%. So that's very positive in my opinion. Their gross margin as a result is going to increase as a percentage of their net sales. So the way you can look at that is you just take their total net sales and then you're going to be dividing the gross margin by that. So last year it was 22,680 divided by 59,685, which would give you a 37.99. So essentially 38% gross margin on their goods. And then this year they're looking at 43% gross margin. So that's very impressive, especially when you think about all of the setback supply chain issues with COVID. So I like to see that. That's very positive. The other thing I want to look at is their earnings per share. As you can see, their earnings per share have nearly doubled year over year, and that's even diluted. So that's very impressive. Just very cool thing to see that their earnings per share and their dividends are growing. Okay, and then the last thing I want to look at from here, the last two things, I guess, are their net sales by reportable segment and then by category. So first, let's do the reportable segment. So this is just breaking down their sales by region, right? Clearly, the bulk of their sales are coming from the Americas. But one thing I do want to point out is that two specific areas. Well, actually, let's break this down on a percentage basis. Their fastest growing region is actually China, which is not very surprising. That's probably the largest addressable market that they have. And then their second largest is Europe. So China's with 58.2% growth year over year. Europe's is 33.7% growth. And then America's is 32.8% growth. So not surprising to see that a little bit smaller since it is the most developed market in terms of penetration wise. That's the one that they've most fully penetrated. And then you also have one more above 30% growth, which is Japan. And then Asia Pacific is very close behind it with 28.5% growth. So as you can see, those numbers still are very, very impressive for a company that is as large as Apple. For them to continue to find ways to grow their revenues is really remarkable. And then when you break it down by category, looking at the iPhones, the Mac, the iPad, the wearables, and the accessories, right, as well as their services, the iPhone is clear leader here. This is definitely their competitive advantage, I'd say, right? This is kind of their bread and butter. They continue to grow at almost 50%. They clocked in at year over year growth of 49.8%, which is absolutely remarkable. Now, keep in mind, a lot of these numbers are somewhat stunted by the impact of COVID, but I think that that's more of a supply chain issue for Apple as opposed to a brick and mortar, because while their stores weren't open, right? I do think that a lot of their sales were coming from online purchases and straight from Apple and things like that. But they definitely did lose a chunk of their revenue when the lockdown hit, as every retailer did. So I do think that they lost that feel of being able to walk into an Apple store and play around with their devices and have all the genius agents, milling around ready to help you. There was a lot of sales being made in retail, but Apple has generated a ton of revenue online, and they continue to show that, moving the bulk of their revenue stream online doesn't necessarily seem to phase them. So I still think that these numbers year over year, while we were expecting them to be pretty juicy, 50% for a company as large as Apple, and for a product as deeply penetrated already in the market as the iPhone, I think that's absolutely phenomenal. Then going down the list, their Mac and their iPads have slowly started to kind of slow their growth down. It's less than that 20% growth milestone that we like to look for. The Mac specifically is at 16.3. The iPad is at 11.9. This doesn't come as a huge surprise to me because during COVID, a lot of people started building their own PCs. And also, we know that the performance aspect of Macs in comparison to PCs is you're paying a lot more for the same amount of performance in terms of Mac as opposed to a PC. So there is a premium factor there. And for a lot of gamers and other more casual or cost effective shoppers, it just makes more sense to go with like an HP or a Dell or something like that. And then with the iPads becoming more like a laptop, it's starting to become a little bit of a blurry product from Apple, in my opinion, in the sense that the iPad is getting very similar to their Mac, and they're trying to market it as a sense that it's a Mac without being a Mac. But I also think that at some points can hurt them, because those two segments start to blend together at that point. Then we have a very strong year from the wearables, home, and accessories. Think about this as kind of your Apple Watch, your AirPods, things like that. This is going to be a segment that, in my opinion, is going to continue to grow at a really rapid rate moving forward. A lot of people wear Apple Watches. I know that specifically the biggest gripe with Apple Watches is that a lot of people think that they're too bulky and that they protrude from the wrist a little too much. But as we've seen with the rumors that have been leaking about the next gen, I think it's the Series 7 Apple Watch that is due to come out this upcoming fall. We've seen that Apple is actually making it a little bit flatter and more similar to that boxy shape of their new iPhones. which should help drive a little bit more interest and momentum with the Apple Watch. But even having said that, I mean, almost every single person I bump into that when I'm out and about that is wearing some sort of wearable tech, it's almost always an Apple Watch. So they do have a very nice market penetration there, and it only stands to grow because having that closed system, right? And obviously there are negatives to that, but having that closed system, if you're an iPhone wearer and you want wearable tech, it just makes sense for you to get an Apple Watch as opposed to anything else. So I think that that will continue to be a very, very strong segment for them, as well as, all of the health things that it does for people and kind of the new age attention that people are paying to their health nowadays. I think that that's going to drive wearable tech in general, and so Apple is going to benefit from that. And then in terms of services, services was actually another very strong segment for them, 32.9% year over year. And that, think of that as about your Apple Music, your Apple News, your App Store. So this is all of the things that they provide in addition to their products. So a very strong segment for them historically and continues to be a fast grower as well. Moving into their balance sheet, we can see, we know that Apple has a bunch of cash. We're not really going to go through a lot of this, but just keep in mind that this all looks very, very healthy. They're probably one of the safest companies. If you have any concerns about another lockdown or something like that, Apple is probably one of the safest companies to bet on just because they are easily modifiable, easy adaptable to the online life, right? Their website is very, very well designed, and they're very comfortable generating sales from their website as opposed to brick and mortar, as well as the fact that they have a large um, stockpile of cash that they're just sitting on, right? And they've been using that cash to buy back their stock, which is very bullish. But in general, they haven't just been spending it on stupid acquisitions or anything like that. They've actually been putting it to good use. And if they don't have a good use for it, then they're willing to just sit on it, which provides them with a lot of liquidity and a lot of room for air, so to speak, in case of another lockdown or any other sort of um, negative black swan event that could affect their business. So that's what I have for this earnings result. I think it was a really good one. I'm pretty sure that they beat on top line and bottom line, but I'm not positive. Yeah, they absolutely crushed it on every measure, which is very, very good. And let me see here if they said anything about guidance. No. Okay, so no full year guidance. They still haven't done any guidance since the beginning of COVID. Okay, so that's kind of the financial breakdown for Apple. Obviously, we know it's a very healthy and strong growing business. Now I kind of want to move into something that we are talking about that we were talking about in the beginning, and kind of use that to transition into the latter stages of this video. So Apple is one of those companies where a lot of people are trying to look at it still from a growth perspective, but there's a lot of negativity around that because they're the they're the largest company in the S&P, they're the largest U.S. company in the stock market. So being at around $2.4 trillion, it's very hard to justify any company, much less Apple, as a growth opportunity, right? As a growth stock, because you expect a company that big to be, somewhat mature. And Apple is a very mature company in terms of they have a lot of years of profitability under their belt and stuff like that. But they continue to innovate at such a high clip, and they continue to add business and revenue streams to their company at such a high rate that I still think it makes them an attractive growth opportunity in terms of thinking about further expansion of existing revenue streams as well as expansion into other areas. So there's two key areas that I wanted to touch on today that I think if Apple is able to successfully dip their toes in the water in, um, so to speak, I think it could be very helpful for that run to three trillion market cap, as we were talking about earlier. So the first one I want to talk about is VR and AR, so virtual reality and augmented reality. So they just filed for a patent. I believe it was, what was the date? It was in late July. They filed for a patent for an AR VR headset that uses a dynamic focus 3D display to project images directly onto the retina of an eye, right? And there's a nice little crude drawing there. It'll probably look a lot better if they decide to go through with it. But essentially, what it does is it's just a VR and an AR headset, and there's been a lot of um, rumors around this, and you can read throughout the patent document that it's supposed to be able to smart sense furniture around you and alert you and not make sure you're not bumping into things, as well as providing a lot of really cool technology in the actual headset itself in terms of image clarity, immersion, and things like that. So now I kind of want to start off this particular part just by touching on the fact that Apple and patents have a very nice, long, complicated relationship, right? So Apple files a patent for anything that they think they're going to use. It doesn't necessarily mean if they file a patent for something that they're going to end up producing it and end up distributing it, right? It's something that they want to essentially keep a placeholder on their technology for and own the rights to their technology until they decide that they want to move further with it and bring it to market and see if it's viable. So again, me putting this in this video, this is not a done deal. They have not announced that they're going to come out with a headset. I'm sure it's still very early on in the process, but it is something that by filing for a patent for, they're showing their hand in the sense that they're interested in maybe dipping their toes in this particular industry, right? And so we've known on like the iPhones themselves, that they have a lot of AR technology built in. They use LiDAR as well on the iPhone 12. So I think that Apple is using this as another avenue for them to kind of develop and extend that technology that they're working on within that big umbrella of VR, AR, LiDAR, etc. And I think this would be a really cool product, and it would be something that would probably directly compete with Oculus as probably the most aesthetically designed and um, brand recognized VR headset on the market. I think it would directly leapfrog all other competition and directly compete with Oculus. As well as, the Apple stands would come out in droves to buy this VR headset if it became a thing. So I do believe that if Apple does go ahead with this, it would be a big win for them. It's just a matter of whether or not they decide they want to do it. Second thing I want to talk about is the elephant in the room, the thing that everybody wants to talk about, right? Is the Apple Car. It's been rumored about for probably up to 5 years now, I think. But here's the really cool thing about this, right? Is they're actually starting to give out a little bit more information on it, and it's starting to become something that sounds like it might be getting closer to reality, right? We had back in I think it was the spring, they were talking about big manufacturing deals and things like that. And now we've kind of pushed that on the back burner. We've heard a little bit more about um, manufacturing partners, but they still haven't settled on anybody yet. The main thing is though is that they are looking, and I think that that's very, very bullish. I think that if Apple were to come out with a car, right? Um, my personal opinion on it is that I don't think they should come out with a car, and I'll explain that in a second. But um, let's just get through this first. So if they were to come out with a car, right? I'm first, you can expect it to be expensive, and secondly, I think it's going to be a direct competitor to Tesla Model S and the Lucids. It probably wouldn't compete with the Model 3 or any of your other EVs like Fisker and stuff like that, just because price wise it would be a little bit more premium. The second thing is I don't think Apple is going to bring a normal EV to market or even a autopilot driven EV. I think if they're going to bring something to market, it's going to be a fully autonomous vehicle. So this is going to be something that could potentially completely disrupt the um, essentially monopoly that Tesla has in the autonomous autopilot industry right now, where Tesla is really the only manufacturer of vehicles where their vehicles are trusted enough with the LiDAR technology and the camera technology to be considered somewhat autonomous. And so I think Apple would come in and directly compete with them in that region, in that specific area, as well as, just I think they would be pushing the envelope in the sense that their car would be potentially fully autonomous. Now, fully autonomous is a stretch, and that means that it's probably not going to come out for a little bit longer. I think we could probably wait for this until 2025, 2026, maybe even 2030 if we get that far out. But at the end of the day, I think this is something that would really, really drive a lot more attention to Apple from different industries, and it would give them some more exposure to just an industry that would give them some diversification as a big tech conglomerate. So I think that it would definitely help them reach that 3 trillion mark, and by that time potentially they could even be targeting 4 trillion, which is absolutely crazy to think about. But um I just think personally that it would be wiser for them to focus on the operating system and the autonomous technology itself, and then to license that through regular manufacturers, um, such as like your Volkswagens, your Foxcons, your Magnas, your Fiskars, and then do a joint partnership with those EV companies to develop a car. So, for example, right, you get cars with Apple CarPlay in them right now, and instead of Apple CarPlay in the future, maybe you would just get um, Apple Auto or whatever it's called, whatever they would call it. That would be their autonomous software that would just be directly installed in-house in the vehicle. So it's a very easy, simple marriage of the two, and it would allow Apple to broaden their horizon because, as we know, you can get CarPlay in a bunch of different cars right now. So Apple Auto would probably be the same. And again, Apple Auto is just my name for it. I just came up with that off the top of my head. But I just think that that's an avenue of lesser resistance for Apple, and I think it's something that helps them get their vision and product to the market faster. But again, I also do think that the big heads at Apple, if they're going to do it, they're going to want to do their own car because they're going to want to design it from the ground up. So either way, I think these two catalysts are going to drive um, a lot of interest in Apple and a lot of intrigue for further growth, right? Because the big question now is, will they continue to be able to grow their existing business as rapidly as they have been in recent times? So, excuse me. So I think that if they're able to do that, it will help diversify and add a little bit less pressure to their existing revenue streams. So like the iPhone and things like that. Um, I just think it would be a really cool way for Apple to start differentiating themselves. So, kind of that's how I wanted to wrap it up. I'll wrap it up with my thesis on Apple and why I personally am very interested in Apple for the next 5, 10 years. So my view on Apple is I think for me it's a buy personally. If it starts to get below 120 or even into 110, double digits would be an absolute godsend. Um, and I think that then it would be considered both a value play and a growth play. I don't think there's anything wrong with looking at it at current levels. You just have to really be sold on the growth story and less of the value approach. But I do think that Apple is one of those stocks where, kind of like Google, Microsoft, Amazon, those big tech companies and those conglomerates, that if you just buy them and hold them for a long enough time, you you will end up looking like you got it at a good time regardless. But I do think that there are some, there's some risks for them. So the privacy concerns that people have had that they're starting to turn into Facebook a little bit more with security and privacy, as well as the, there's battery throttling, and they've had their share of controversies. But I do think that, Apple does a very good job of marketing. They're the best marketing company in the entire world, in my opinion. Um, and I do think that they will continue to lead the way in terms of innovation for wearable tech, phones, computers, iPads, which that was a market channel that they essentially created with the introduction of the iPad, as well as their AirPods and things like that. Um, just the aesthetic of their company, you know, puts them above the rest. The name recognition puts them above the rest, and it's already shown that people are willing to pay a premium for their product. Um, and they continue to grow regardless of increasing premiums, right? We've seen the iPhone prices continue to increase, but people are still paying for them because they really like the iPhones and they really like iOS. So I do think that Apple is here to stay. I think that they're going to continue growing. I think that it's a very interesting company for me. It's something that I've been watching for a while, and as soon as I feel really, really comfortable of getting a position, I will. I currently don't have one, um, but I think it is, if you are trying to build a long-term portfolio that is well diversified and heavily leaning towards large conglomerates, kind of like the too big to fail names, I think Apple should be a cornerstone of that, and has at least a reason to be in the discussion. So that's kind of how I feel about Apple, guys. I'm going to link the first two videos of this series right at the end. You'll see them pop up as cards, so you can watch those if you'd like. And next week we will be going on to talk about Tattooed Chef, which is a great company. You guys will learn a lot about that. I'm very excited. But if you really enjoyed this video, please make sure you like and subscribe, as well as check out all the other videos. I plan to post about 2 to 3 times a week with the different playlists, and Outperforming Opinions comes out every Sunday at 8 p.m. So be sure to check that out. Turn on that bell so you get notified when it drops immediately, and you can be one of the first to watch it. And then give me your honest feedback below and tell me what you guys think about Apple, as well as just the overall channel. I'm very open to feedback and I really appreciate it. So thanks, guys, and I will see you on the next video. Have a great weekend.